On today's Hot Sheet, I'm discussing the NAHB Wells Fargo Housing Market Index, that's builders sentiment and all of that, as well as November housing starts and your weekly mortgage application update. We had a move there. Today is Wednesday, December 18th, 2024. I am Byron Lazine, and the Hot Sheet starts now. Good morning. Welcome into this live edition of the Hot Sheet. Let me know in the live chat which market you are tuning in from. If you're new to the Hot Sheet or new to the BAM YouTube channel, hit the subscribe button down below and the notification bell. If you're listening over on Spotify or Apple, where we actually upload the replay of the Hot Sheet each and every morning, please consider leaving a review over there. All right. As this action-packed week here, as we wrap up the year, continues, reminder that today the Fed has part 2 of their meeting, and at 2 o'clock today, Jerome Powell will be launching into his presser, sharing his thoughts, what the decision was. Of course, right now, as we open up this Wednesday and as the markets open, the CME group has their thoughts, of course, out on what the FOMC decision is going to be in just 4 hours and 25 minutes away. That is a 98.8% chance that there will be a rate cut later today. We will extract all of the value pertinent information from that presser, and we will review it here on the Hot Sheet tomorrow. So we're going to extract the transcript every moment Jerome Powell mentions housing in prepared statements or is asked a question during the Q&A portion. We'll break that all down, obviously, tomorrow on the Hot Sheet. All right, jumping in now to builder confidence as reported by the NAHB Home Builder Sentiment. Builder confidence right now remains steady. There's, though, future optimism for 2025. Okay, the end of the year saw builder sentiment hold steady. High home prices and mortgage rates offset renewed hope that about better regulatory business climate in 2025. Builders express increased optimism for higher sales. And a comment here from a custom home builder from Wichita, Kansas. While builders are expressing concerns about the high interest rates, elevated construction costs, and lack of buildable lots continue to act as headwinds. They are also anticipating future regulatory relief in the aftermath of the election. So interesting to hear, and this is an NAHB chairman as well as a custom home builder from Wichita, say that, hey, we're expecting regulatory relief, which will free up builders moving forward. This is reflected in the fact that future sales expectations have increased to a nearly 3-year high coming from the NAHB chairman. NAHB is also forecasting additional interest rate cuts from the Fed in 25, but with inflation pressures still present, we have reduced that forecast from 100 basis points to 75 basis points for the federal funds rate. And that's what you're seeing now is most analysts are kind of settling around, most analyses anyway, this 75 basis point for federal funds rate, which would be 3 cuts out of 8 meetings. And so a lot of folks are settling around, that as being the range. And the prediction now, as we sit here in December 2024, obviously we can and expect to see that change throughout the year. Remember last December, there were folks saying 7 cuts in 2024. Ended up being after today, it'll be 3 for a total of, 100 basis points. But really that'll kind of act as 4 cuts. You had a half a point, quarter point last meeting, you got a quarter point today. Anyway, concerns over inflation risk in 25 will keep long-term interest rates, like mortgage rates, near current levels, with mortgage rates remaining above 6%. That's the feeling here from NAHB. The sentiment, speaking about that, how they're feeling about things, is at a 46. Okay, so 31% of home builders cut home prices in December. The average price reduction was 5% in December. These are all the same as November, so not big changes there. The use of sales incentives was 60% in December, also unchanged from November. And then the sentiment remains steady at 46. So 46 over 46. Current sales conditions holding steady at 48. Sales expectation in the next 6 months increased 3 points to 66. It's the highest level since April 22. Traffic of prospective buyers posted 1 point decline to 31. We also are seeing obviously a seasonal impact there. So the biggest takeaway here is they're not feeling any more or less confident than they were in November in the current climate right now, they being builders, but builders are expecting that the next 6 months are going to bring more buyers and more opportunity for them to move inventory and have a better sales condition going into 2025. I think that's the same tailwind and optimism that agents and real estate professionals across the existing home sales sector also have heading into 2025. Staying with builders now, take a look at monthly new residential construction. Okay, building permits here, as just reported this morning, coming in at 1.505 million. Housing starts coming in at 1.289 million, and housing completions are coming in at 1.601 million, just released today on that data. The chart looks like this. Okay, so completions moving down, permits moving up, and starts moving down. That is what's happening now. We'll take a look at what those numbers actually look like when you consider building permits. How are they actually? They're feeling about the future as positive, and are they pulling more permits to say, hey, we're going to put our investment where those feelings are. Okay, this 1.5 plus million is 6.1% above a revised October rate of 1.419 million, because these are annualized rates, by the way. It is 2.2% below the November rate of 1.508 million. So, hey, permits are up on an annualized basis, and that would coincide with where their feelings are about the optimism for the future. Authorizations of units and buildings with 5 units or more were at a rate of 481,000 in November for the multifamily side there. Housing starts, okay, actually starting the project. We're coming in at 1.8% below the October revised rate of just over 1.3 million, and it is 14.6 below November's rate of over 1.5. So starts down a tick, but not much there. And then housing completions coming in 1.9% below the October number, and it is 9.2% above November 23's rate of completion. So more completions happening than a year ago. Right now, you are seeing more permits being pulled than at an annualized rate than last month, 6.1% above that, and basically flat with last year. Housing starts down tick, and you're also in the winter, so I think there might be an impact there as well on that number. Here's your new housing units started in the U.S. for single family starts versus total starts. Obviously well below the peak of 21-22 levels, but still pretty much above where we were in pre-pandemic times on total starts, and really for a high point when you consider all the way going back to 2007 till today, when you take COVID out of it on housing starts. Housing starts, much healthier place than the GFC recovery. All those talking points inside of BAMX in your hot sheet show notes will be uploaded into BAMX, as well as a total of 5 charts just today. Use code HOT to have access to BAMX today, where you get all your relevant information in a 24-hour time period, and every Friday, done for you content. We take all of the fluff out so you can just focus on what you need to know and what you need to deliver to your clients each and every single day inside the BAMX platform. Mortgage applications have been tracking this obviously on a weekly basis as always, but tracking it even closer lately, as we've seen week over week improvements here on mortgage applications when you compare to last year. I get it, coming off of all-time lows, but we are seeing improvement heading into the spring market, which is another sign, another welcome sign that we could be heading into a tailwind market instead of the type of markets we've been experiencing here over the last couple of years. Mortgage applications, though, this week decreased 0.7% from the previous week. That's the headline number. So that will include, obviously, refinances. The refinance index decreased 3%. Remember last week we had mortgage rates go up. We're near 7% all of a sudden after getting close to 6.5%. The seasonally adjusted purchase index increased 1% though from a week earlier. So another move up on purchase index, 1% from the week earlier. That's the number that we keep looking at. If that improves every single week, as it has for about 3 months now, heading into the spring, even in these seasonal declines, we're going to take that as a W. Okay, we're going to consider that a positive note moving forward into the spring market. Also, purchase index when compared to same week 1 year ago was 6% higher. To me, those are both wins. We'll take the wins where we can. Obviously, mortgage rates going up are suppressing that number even more. And the other obvious is, yes, I get it. We're still at a low point going all the way back to 1995 on mortgage applications, but we need to start seeing positive momentum week over week. We've been seeing that now for 3 months. You can't get, to a healthier spot on mortgage applications without seeing some type of weekly movement up over time. We're starting to now finally see that. What we're also unfortunately seeing today is a 10-year. Oh, 10-year actually, I'll take that back a little bit. We're back under 4.4. We were over 4.4 here, as you can see, to start the day, as high as 4.42. We've seen this drop down now on basically market open down to 4.389. We just take a look at where the markets are. Not really much going on here on the markets, slightly higher here before the Fed decision. Interesting to see that 10-year is dropping before the Fed makes their decision here later today. Still an elevated 10-year, which has been impacting, obviously, where the 30-year fix comes in over the last week and a half. Now at 6.92, where we ended the day yesterday. We've been in those 6.9s now for 3 straight days. And really where the 10-year is today, not a huge sign of that moving down anytime today. Maybe it does move down after Jerome Powell, depending on what he says. Not necessarily the cut. We know the cut is coming. Remember, 98% chance right now that we're going to get a cut this afternoon, according to CME Group. But it's really going to be about what Jerome Powell says and how he says it. And that's the information we're going to break down tomorrow morning on tomorrow's live hot sheet. If you've never seen a hot sheet or listened to a hot sheet replay, on the morning after the Fed decision, we extract all of the data from the 1 hour presser, the transcript, break down every single moment, question where there's a correlation to housing, and we focus in on that. So we'll do all of that tomorrow. We'll break down the analysis on what he said, how he said it. We also have unemployment tomorrow, amongst any other breaking news within a 24-hour period. This is the only place to get this type of information live on the internet each and every single day, where it just focuses in on your housing market. Subscribe to the BAM YouTube channel down below and hit the notification bell. And we'll see you back here tomorrow morning, where we break down the Fed decision and what Jerome Powell said specifically about your housing market. Until then, of course, toodaloo.